Welcome everyone, and thank you for joining us for our 2021 Open Banking and Digital Financial Services Environment. My name is Leah Renwick. I'm the East Coast State Manager at the FBAA, and I will be your MC for today. This is our first eSummit for 2021, and this will run over today and Friday's session with beneficial content for you to take away. So guys, if you are sitting behind a webcam and you don't have it turned on, can you please turn it on for us? We'd love to see you, and we know that lockdown has been a hellraiser for some people down there, and you're still stuck in parts of New South Wales at the moment. So please do turn them on. We would love to see your faces today and to give you a warm and friendly e-hug along the way. There is 1.5 CPD hours allocated to each of the eSummits here in New South Wales and the ACT. And you will receive an email with a CPD code and survey following. So make sure you tune in throughout the whole webinar session to ensure your attendance is marked off and you will receive it. We'd also like to thank our sponsors for their support. It's been a really tough year, yet they've continued to work closely to ensure that we can still provide you with the education and assistance you need during this time. So please don't hesitate to get in contact with them. They're always here to support you. You'll get their contact details in a follow-up email after today's session. FBAA members, please don't forget that for every member that you refer into the FBAA, we will give you 10% off your renewal each year. The person does need to note your membership number on their application form for you to receive the 10% discount. But if you know anybody that is a member of another association, please refer our details over to them and let them know. We would love for them to join us on board with us. Also remember, if they do transfer from another association over to us, they can potentially have that membership for free. Don't forget to download the FBAA app to easily access information, updates, and upcoming webinars for you to register for. FBAA members, you will also recently have got an email from the FBAA asking you to change your password for the members area. This wasn't a hoax email, guys. We do need you to do it. We have launched a brand new members area on the website. We've actually launched a whole new website. So please make sure you jump online and take a look at it, and remember to change that password when you go in there. Also, it's a good time for you to check that your details with us are up to date and current. We've got quite a few members out there that may have changed postal addresses, or you may have a new mobile number, and we do need to get those on file for you as well. And don't forget, especially while you're in lockdown there in New South Wales, we still have our broker support program. So if you are experiencing any kind of hardship at the moment, we are there to help you out. And that means if your renewal is currently due, we can have a look at support sessions for you where we can actually make your renewal payment over a split period of time. We also have a Call Your Broker marketing program for you. So it is a good time for you to reach out to your clients in New South Wales to let them know that if they're going through any sort of problems at the moment as well, that they should reach out and contact you as well. There's the BID digital education course, general support, mental health, which is very critical to you guys at the moment. So please make sure that if you have had four walls around you for a long period of time, just reach out and say hello, and you'll probably find over the coming weeks as well, I'll be giving you a quick call just to check in and make sure that everything's okay. There's also some video content on there as well. So guys, to commence today's session, we will now hear from Senator the Honourable Jane Hume with an update on open banking and digital financial services environment, and also what the government is doing and planning for the future. So it's over to you, Senator.
Hello everyone, and thank you to the Finance Brokers Association of Australia for the invitation to speak to you all today. A lot has changed in the past year, but buying a home is still one of the most significant financial decisions that Australians make. And it can be daunting. And I want to recognise the role of brokers in matching borrowers to lenders, advising on loan application processes, and negotiating interest rates. Australians are increasingly recognising the value of mortgage brokers to help them navigate the world of purchasing property. In 2003, mortgage brokers accounted for just 25% of total home loans. Now today, that number is 60%. Demand for services will continue, and recent Royal Commission reforms will only enhance consumer confidence in your sector. It's also inevitable that technology and innovation will play a greater role in future. And I think that it's terrific that the Finance Brokers Association of Australia has devoted today's webinar to open banking and digital financial services. As Minister for the Digital Economy, I am passionate about the benefits of open banking. Now, it's still early days, but the consumer data right will revolutionise the way consumers, both individuals and businesses, use their data to compare prices, switch products, manage their finances and cash flow, and streamline banking product applications, including loans. I'm equally excited about what this means for the growth of Australia's fintech industry to deliver innovative, data-driven solutions that improve Australians' lives, drive competition and productivity gains across the economy. Australia's journey towards the consumer data right, the framework that underpins open banking, started with the 2014 Financial System Inquiry, which recognised increased data sharing could improve financial services outcomes. Now, this was followed in 2015 by a competition policy review, which recommended improving individuals' access to their own data to better achieve consumer outcomes. The evidence base continued to build. In 2017, the Productivity Commission's inquiry into data availability and use proposed the creation of an economy-wide comprehensive right to enable consumers to control their data. Now, at the time, the Productivity Commission said there is enormous untapped potential in Australia's data. Everyone, including the government, agreed. In the 2017-18 budget, we announced the introduction of open banking and commissioned a review to recommend the best model for Australia. The government subsequently announced in its response to the Productivity Commission's inquiry the creation of the Consumer Data Right, an economy-wide approach to data portability, implemented first in the banking sector and soon to be followed in the energy and telecommunications sector. The consumer data right was viewed as a game changer from the very start. While modelled in part on the open banking regime in the United Kingdom, the Australian framework was established with a founding principle of universality, which, among other things, put Australia at the fore of data sharing regimes globally. It meant that it was designed with economy-wide application at its very core. The Consumer Data Right framework enables consumers to safely, efficiently and conveniently harness their own data and information held by Australian businesses for their direct benefit. The framework will enhance data-driven innovation and make products and services more affordable by putting downward pressure on prices as a result of increased competition and greater choice. Importantly, a fundamental design feature of the consumer data right is robust privacy and security protections, which will help build trust and confidence in the system. Now, these protections allow consumers to control what data is shared and with whom and for what purpose, and when it must be deleted. Now, open banking launched on the 1st of July 2020. It started with the big four banks, ANZ, Commonwealth Bank, NAB and Westpac, providing access to certain consumer data. And this included data on savings accounts and credit accounts. From the 1st of November, the big four started providing access to mortgage and personal loan data, followed by lines of credit and trust accounts in February 2021. A number of businesses that help consumers to make the most of their data have become accredited data recipients, or ADRs. And we expect the number to steadily increase as the rollout progresses. We are also now seeing banks also choosing to become ADRs, with Regional Australia Bank and the Commonwealth Bank of Australia becoming accredited, and more are expected to follow. The next milestone is fast approaching. Starting from the 1st of July this year, 12 months after the big four banks, the rollout of open banking in the non-major banks is set to occur. Now let me step through how the open banking process works in practice. Under the Consumer Data Right framework, there are three main parties in open banking. First, there's the consumer, an individual or a sole trader business. Second, there's the data holder, a bank. And third, there is the accredited data recipient, or ADR. Now this could be a budgeting app, for example, or a rival bank, but either way, they must meet stringent accreditation criteria, including information and security and privacy requirements. The future applications of the consumer data right are endless. A customer could direct her bank to share her data to an innovative ADR, say an app, which might be able to help her find a better deal on her financial products and services based on her individual circumstances. And as the consumer data right is implemented in more industry sectors beyond open banking, that customer could eventually use the same innovative application to get a better deal from energy and telco providers and beyond. At no point does the customer need to share her banking login details or her password to do so. The customer is provided access to her data in minutes rather than in weeks, and she can share her data easily with other accredited data holders or recipients. And importantly, the customer has control of her data throughout the entire process. She can view and manage and withdraw consent for data sharing, as well as ask for her data to be deleted when she's done. In January 2020, an inquiry into the future directions for the consumer data right commenced, led by Scott Farrell. The government asked the inquiry to consider options to expand the functionality of the consumer data right. So this included how it could be expanded for consumers beyond just choosing to share their data and towards applying for and managing products, including by initiating payments. It also examined how the consumer data right could promote innovation through the creation of products and services that are mindful of the needs of vulnerable consumers. And importantly, the inquiry was asked to identify how the CDR could enhance consumer, business and economic opportunities. The inquiry came back with 100 recommendations, and the government will respond to that report later this year. Providing for deeper functionality alongside the government's accelerated expansion to other sectors puts Australia at the cutting edge of digital and data-driven economy. During COVID-19, Australia vaulted forward in digital adoption for both consumers and businesses, and we now have an opportunity to keep that momentum going right across the economy. And that's why the government is investing almost $1.2 billion in Australia's future through the Digital Economy Strategy. The Digital Economy Strategy provides a roadmap to grow Australia's future as a leading digital economy and society by 2030. As part of the strategy, we have committed $111.3 million to strengthen and expand the consumer data right economy-wide. Now, we've already commenced implementation in energy, and we've announced telco will be designated as the next sector. To inform the sequencing and the prioritisation of an economy-wide rollout, Treasury is also undertaking a strategic assessment which will inform a roadmap for implementation. It will also expand Australia's international influence to establish an interoperable and rules-based approach to international consumer data portability and sharing frameworks. In the new area of open banking, Australian fintechs have a chance to seize on opportunity. It's an ideal time to innovate and expand as people look for new ways to manage their businesses and personal financial affairs. We have a tax and regulatory framework that supports innovation. We have the enhanced regulatory sandbox in place. We've introduced restricted authorised deposit-taking institution licensing regime to reduce the barriers to entry into the banking sector. We've established the equity crowdfunding regime to expand access to finance for startups and early stage businesses. And we've established the UK-Australia FinTech Bridge, and that's our intention to negotiate a new bridge under our digital trade agreement with Singapore. And we're not stopping there. We'll continue to look for exciting opportunities and to encourage and support startups and industry to support Australia's economic recovery and spur it on. So, I'd like to thank the Finance Brokers Association of Australia for hosting today's webinar. The Morrison government believes that data is critical to building a modern digital economy and to delivering better outcomes for all Australians. Open banking and the consumer data right is just getting started. We understand the idea of letting money work for us with investments, but imagine if we could do the same thing with data, where consumers let their data work to their advantage and consumers trust that their data won't be misused. So this is what the future of the consumer data right could look like as it expands. Thank you.
As well. It's always really good when I get a message from the host today to go, hey, your microphone's not on. But guys, thank you to Senator Jane Hume for a great wrap-up from the Australian government and also what's happening with the planning for the future and what's ahead of us. If you do have any questions on today's session from Senator Hume, by all means, please send them through in the chat box. Alternatively, you can send them to me directly at the FBAA email address, which is simple, leah@fbaa.com.au, and we're happy to forward them through on your behalf. So guys, I would now like to welcome Mariana Anaya from Credit Fix Solutions to join me on the main floor today. And she'll be outlining how credit impairment impacts the process flow of getting the appropriate applications approved by online lenders, which is a complete mouthful of a subject title to have. But Mariana, welcome this morning into the Digital Summit. I'll get you to unmute your microphone for me as well. And I'm going to hand straight over to you.
Hi everyone, it's great to be here today. Thanks Leah for that question. I've got 5 minutes, so I'll get straight into it. So to answer that question, first and foremost, I think it's very important for brokers to do an upfront credit check for their client when conducting a needs analysis, and especially if you think that your client does have any red flags. I think that's very important. This will avoid auto declines. And as you know, lenders aren't made to disclose information as to why the application has been declined. So doing this upfront credit check would give you the upper hand and makes you aware of any issues that there may be on the credit report. By doing this, it also avoids another inquiry on the credit report, because as we know, unfortunately, a declined application is still reported as a valid inquiry. So auto declines can be as simple, or a declined application can be as simple as too many inquiries on the credit report. I mean, we've seen firsthand some buy now, pay later type inquiries decrease the score by 70 points. We can remove duplicate and fraudulent inquiries, and on average, each inquiry does hold anywhere between 30 to 40 points. If a credit score is sitting just below the 500 mark, by removing a few inquiries, as I mentioned earlier, can be the difference or make the difference between mainstream lending and non-conforming. By running a credit report, you may even come across a small utility default, which a lender might have accepted previously with a letter of explanation. However, now with the tightening of credit policy, it may be difficult leaving that default there to mitigate, and this is where we could potentially assist. We're starting to see smaller blemishes now on the credit file with comprehensive credit reporting. So not only are we seeing defaults, but all liabilities are on the report and you can see the account and the repayments over a 24-month period. So this can make it a little bit more difficult when it comes to the process of having your loan approved. We are specialised in the removal of unfair listings or unfair negative listings like defaults, and each time we do remove these types of listings, it can increase the score 100 to 300 points, depending on what it is, of course. Again, by approaching us and allowing us to remove this negative data, it could allow the customer to look at top-tier lenders. With the tightening of credit policy, we need to ensure that deals are submitted as clean as possible to enable a formal approval to be provided within a timely manner. By approaching us before lodging an application, we can look at the overall credit report and identify any issues that there may be. My assessments are free, and I'm happy to share, credit reporting tips to your client at the very least. So I've noticed that a lot of brokers are now paying more attention to the credit report, especially with their first home buyers. So by approaching our service, my brokers are discovering that there is a solution that we can provide when previously there might not have been one. As a result, we're adding these types of clients back into the market and providing them with newly found financial solutions instead of putting them in the too hard basket. So our process does take anywhere between 3 to 8 weeks, and weekly updates are provided along the way. The last important note I would add to answer that question is to be aware that there are 4 official credit reporting bureaus in Australia. So this is Equifax, which we're all aware of, Illion and Experian. and creditor watch if obviously your client is director. So these 4 reports don't link up, unfortunately, and you may have different information on one opposed to what's on the other. So I've seen cases where someone has a default on their Ilion report, however their Equifax report is clear, and vice versa. So especially when you have a client that does present with red flags, so it's very important to order the 3 reports or the 4 reports if they are director. And this could save you a lot of time and effort later on if there is something on the credit report. And I can provide all this information after. So that concludes my answer to that question, Leah.
Always love it. But Mariana, I just want to double check with what you were saying before, and just to make it very clear for everybody. When somebody comes in for credit repair through Credit Fix Solutions, your main objective is to clear all of the credit files. So where we were saying that there's 4 companies that are out there that look after credit files at the moment, it's not just they're going to have a problem removed from, let's say, Equifax, but it might stay on Dun & Bradstreet. You guys will clear the whole slate.
Correct, yeah. So we'll look at all 4 reports, again, depending if they're director, and we'll make sure that all 4 reports are cleared. Otherwise, there's no point, you know, removing a default on one report and it's still listed on the other, because a lot of the major banks will definitely check all 4 reports.
And are there any type of defaults that you know categorically you can't get removed?
Well, there are some defaults where we know we've had low success rate with. I can sort of, there's a few off the top of my head. I'd probably say one, just listing one, is HSBC. It's very hard to find legal errors and legitimate legal errors and loopholes. That's what we're trying to find. So it's very hard to find errors on their end. But again, we've been successful. It's just all case by case and depending on their scenario.
So basically saying to some people out there as well, if let's just say Bill Smith, because he pops up a lot in finance, if Bill Smith just hasn't repaid his let's say personal loan because he's just a bad bloke who just doesn't want to repay his personal loan, that's something that we really need to just sit and think, okay, I probably shouldn't send that through.
Yeah, definitely, because yeah, it doesn't seem like strong enough legal grounds if he's just, you know, oh, I don't want to pay it, or I was on holiday and forgot. Still, we might find errors just within the bank's protocols. We never know. Sometimes we do get scenarios like I was young and dumb. And sometimes we can still have the default removed with that scenario because we're able to find other errors within what steps they followed before listing that default. But it doesn't happen all the time.
So I think the underlying comment there for that one realistically is, when in doubt, just send a scenario through and give you guys the chance to have a look at it.
Definitely, certainly. When in doubt, send it through. I'll have a chat to them and we'll be very honest. If it's something we feel as though we might not have high success with, I will let the client know. And we have a no-win, no-fee structure anyway. So even if we do take it on to try to remove it, if we can't, the client isn't out of pocket.
Perfect. Mariana, thank you so much for this morning's session. And guys, if anybody has any questions for Mariana, drop them down into the chat box, and Mariana will be with us all morning this morning, so we can ask them throughout the morning. If not, and you're not comfortable asking them in the chat box, you can always send them through to me, and Mariana's details will also be sent to you at the end of today's session. So thanks for that, Mariana, and hopefully lockdown hasn't been too bad on you down there, and we'll see your smiling face soon. Perfect. I love a thumbs up from the background photos there. So guys, I'd now like to move through our agenda and bring on our panel of experts to talk about my favourite subject, being SLAs, the online application process. And I'd like this morning, I'm just going to note, Finstro, unfortunately, one of our national sponsors, couldn't join us today. We've had a wonderful morning with them, and because we're moving back into digital platforms with New South Wales, they've been held up on another session. But I will be joined by Cameron from Strive Financial, we've got Josh Ian from On Deck, and Danelle from Lend. Guys, good morning. If you can turn your microphones on for me.
Hello, Legend.
Morning, everyone.
Morning.
Welcome back to eSummit. The wonderful thing that well, Cam, look, we're back with you in a polo shirt. I'm not game enough to go after the last session we had in New South Wales. Cameron admitted to the fact that he has done these sessions in shorts. I figure in the middle of winter though, Cammy, it's probably a bit cold for shorts.
No, I got the aircon on, mate. Just a pair of boardies.
Pair of boardies on down there. Donnie, you look like you're back in your office. So obviously we know that you and Cam are based up on the Gold Coast, so we've got a little bit more freedom than what our fellow colleagues in New South Wales do. So we're hoping all is well for you and the team at Lend at the moment as well.
Thanks, Leah. Yes, definitely. We're in the office. I can say it's freezing, but those in Victoria and New South Wales will kill me. But for a Queenslander, it's freezing. And yes, no, we're well, and just sending out lots of love and virtual hugs to all of our Sydney partners, brokers, lenders alike. Yeah, definitely feeling for you guys. And I'm going to do a shameless shout out to two of my favourites who are actually in Melbourne joining this particular session today, to Janine and Rod. So morning, guys.
And then we've got Joshy over at On Deck and looking at the roof and the wall behind you, mate. You are in isolation down in New South Wales. How's it going?
Very much. Look, missing the gyms is probably the big one for me. I'm not going to stand up when you talk about the topics of shorts. But look, from a kind of, business perspective, we're an online lender, so it's nothing new. We kind of went through it last year. But I do miss the kind of the collaboration in the office. But going okay.
Mate, I'm the same as you. So, Janine, you'll be pleased to know I'm actually down here in Melbourne at the moment in isolation at my hotel until my results come through from the Victorian government's COVID test. I've had 2 in the last 24 hours. So it'll be safe to say by the end of this, I can categorically say I do not have COVID. But it is different when you start travelling again and seeing what's happening around the country. And I know it's nothing on New South Wales, but Queensland just coming off our 7-day lockdown. By day 2, I was going stir crazy, having just got used to freedom again. And I just have sympathy for you guys down in New South Wales at the moment. So hang in there, guys. We are all with you, and we're here to support you the best that we can as well. So guys, that's the serious stuff. Let's get to the real serious stuff. We're going to go through a range of questions this morning that we've been asked throughout the last sort of 6 months that are relevant, we believe, to your businesses and your lending practices. And there may be some curveballs that get thrown in there as well. So I will start by asking the first question, and it's, what is it? And it's just a 30-second promotion. What is it, though, about your product that sets you apart from other SME lenders? And Cam, for you to be that sets you apart from other private lenders. But Joshy, I'm going to start with you.
Yeah, awesome. Look, probably 2 things. So over COVID, we've really taken the time to invest in the kind of the product and the process that we're using to lend. So one of the things that we've launched recently is a lightning loan product, which really supports our brokers in the sense that you can get an outcome and funding normally within 2 hours. And then the other part is we do like to play in the larger, chunkier loans. So up to 150 is bank statements, and we don't need an all-papa or a GSA over the business.
Perfect. And Danelle, from Lend's side of things, what separates Lend's from other tech platforms that are out there in the marketplace at the moment?
Oh, look, Leah, first of all, I guess it's one application form, one set of bank statements to access over 60 lenders. We've also last week internally to our brokers had a soft launch of our new asset finance platform, which has a full quoting tool and Equifax and privacy integration. So that's a pretty exciting piece. So once we release commercial property, then the platform will be a one-stop shop for all things commercial. And look, to be honest with you, I'd love to say it's actually our people. And I know we normally think about front end. So myself, Georgia, the guys that, get out on the road and talk to you, but our development's actually in Moorabbin. So all our development is onshore. We've got 16 people that sit in an office in Moorabbin. So we can actually customize. It's not an off-the-shelf platform. We built it. So any customization that you need, you can reach out to myself and we can work at looking that into our schedule. So fully customizable and one application form.
So critical. And coming up to you at Strive, what separates Strive from other private lenders?
Hey, Legend, thanks so much for having us. I guess a couple of things. The size of Strive is obviously quite small, right? We're only a small family-run company. So the personal service that you get, when you pick up the phone and you ring here, you get myself or you get Jonathan. If you're ringing for a discharge, you get Casey, who's the in-house lawyer who's going to be doing the PEXA settlement. So that real personal one-on-one touch. I guess also with our borrower side of it, we're still able to meet with our borrowers. So we have a personal touch there as well. These days with COVID and stuff, it might still be done via Zoom in our lawyer's office, but it's still one-on-one with the people that we're lending to and the brokers that we're dealing with. I guess on a product side of things, not having any upfront fees or charges, and I've talked about it for 6 or 7 years with you guys on FBAA PD days, but I guess it can be a grey area, the so-called short-term lending, the loan shark type scenarios, where there's upfront fees and charges in application fees and establishment fees and desktop valuation fees and whatever else wants to be charged these days. We don't have any of that stuff. So if your client doesn't get any money from us, if we don't fund a loan to your client, it doesn't cost them a single cent. So they're probably the couple of things that we try and pride ourselves on in that space.
And Cam, I think the other thing that's been raised with us of recent times as well, there are quite a lot of private lenders out there that we would deem as fly-by-nighters. So they turn up, they take the application fees, they take the upfront fees, and they may only be around for sort of the 6 to 12 months, 18 months tops, where I look at Strive, and that's only a company name change for you guys. You were originally Crown and Gleeson. How many years have you been around for now?
Yeah, so Jonathan's, it's been family-run company since 2002. So Jonathan's dad started back in 2002, Crown and Gleeson and Australian Mortgage Fund until the change into Strive Financial, but it's still myself, Casey and Jonathan. So yeah, going on 20 odd years now.
So, and I think that's really important to note as well, is that with these private lenders, their strength and durability of their company is given by how long they've been around for. There are companies that have kind of have come in and been around and then obviously disappeared over time, where you guys are still standing strong. I mean, you've made it through a GFC, you've made it through COVID, you've gone through market crashes, and you're on the flip side of that now of being in a really good position in today's market.
Yeah, it's been, there's been tough times, don't get me wrong, but being as small as we are sometimes has its real benefits. We don't have 20 staff, we don't have corporate offices, we don't have that stuff. So we've been able to insulate ourselves through those times and make sure we're able to come out the other side.
Perfect. So guys, I'll go to my next question now. If I was a startup company that had been trading for 6 months, but I have a high income of over $100,000 already, and trust me, that's a dream world for any business, what would be the maximum amount that I could borrow, and what documents would you require? Now, Donnie, I'm going to throw this one down to you first.
Leah, good one. So 6 months trade, certainly interesting. Out of our 60 lenders, there's probably 3 or 4 that play in that space when you're looking at a straight out unsecured loan. Now, bear in mind, one of the most untapped products in Australia, although watching the ABC story on Greensill last night, I'm not sure how many people will be excited about debtor finance at the moment. But certainly debtor finance is probably one of the most untapped products, and that's where you can actually access funds early from day one. So if you've already raised invoices in your business to other businesses, so bear in mind it does need to be B2B, but you can actually access finance from day one. And then you've got guys like Cam, who's also on our panel, and they'll be looking at equity and exit strategy in the property. So regardless of their turnover, if they do have an asset that they can use or a property that they can use, then they will actually be able to access, again, funds from day one, as long as they're a company as opposed to a sole trader. So it is tough, but there are options for trading under 6 months.
Perfect. Josh, over to the team at On Deck. Is that scenario something you guys would look at? And if not, is there an alternative for them?
Yeah, easy. Look, so short answer is no. We do need at least 12 months in business. The exceptions that we can have around time in business, though, is if they've had a kind of a natural natural progression from either a sole trader or a partnership, and then moved into a company structure, which is quite common. In that scenario, then we just look at the combined time trading. So that could be 1 month as a company, but as long as they've had 12 months in total.
Perfect. And Cami, up to you at Strive Financial. 6 months, if they've, I'm understanding if they've got security for Strive, how do we make this particular scenario fit box?
Yeah, most definitely. So we can lend to one-day-old PTY LTD companies. Again, I guess where the time in business comes in for a lot of the unsecured lenders is they need to be looking at bank statements, making sure they've got income that they're going to be able to repay the loan. Where I guess this is where we're completely opposite to those guys. We don't need to see any bank statements. We don't need to see BAS statements. We don't need to see time in business. What we do need to see is what the exit strategy is on how the client's going to pay the loan back. So whether that's they're going to refinance the property, whether they're got outstanding invoices that are going to be paid 30 days end of month, whether they're selling the property, whatever it is, first off, we need to look at security. And second off, what is the exit strategy? So it's where we sort of differ from the on-decks of the world in that sort of space. And the reason why we can lend to a one-day-old PTY LTD company where people say, well, hey, no, they're going to make any money, you're a loan shark. Well, at the end of the day, we're lending against security and exit strategy.
Perfect. Now, this one is going to be targeted to Joshy and Danelle. Bill Smith has managed a restaurant for over 15 years, but he's decided to go out on his own. He's buying his own restaurant now, but he needs finance for fixtures and fittings. So is this something that you guys could look at? Is this, is this scenario going to fit the box? Is there any other type of finance potentially you could offer him if it's not for fixtures and fittings? Joshy, I'll go to you first.
Yeah, easy. I think this is kind of an extension of the previous question as well, in terms of we do need to see them operating and owning the business. So great that they've obviously been a manager in the business for that length of time. Things can drastically change when they take over the business. I think that, as Cam said, the easiest way to really look at how we lend is that we look at the cash flow in the business. So it's really difficult when they haven't operated the business and we can't really look into the bank statements of that entity. Because that's basically our security is the cash flow and how they manage their bank account, overtaking a physical asset. I think probably Danelle, this is probably a good progression to yourself.
Yeah, thanks, Joshy, legend. Don't worry, Leah, we'll just talk amongst ourselves.
You guys have got this. It's okay. I'll go.
Yeah, it's all good. Look, we do have quite a few options, and I think back to about 6 weeks ago, we're actually here on the coast. There was a company, they had been trading, been registered for 6 weeks. She'd worked in natural therapies for 17 years and was opening a health retreat in Tamborine. So through some interesting types of asset finance, we could fund a couple of not only the fixtures and fittings, but also a couple of spa baths that she needed for up there. So again, it's really about the quality of the applicant as well. So are you asset backed? Do you have that length of tenure? And secondly, do you have a deposit? And that's really clear with the handful of lenders who are not doing this type of funding based on security. So they are actually looking at the business. You're really looking to have a minimum of a 35% deposit. So to make it easy numbers, if you need, 100 grand to do your fixtures and fittings for a brand new business, but you've been in the industry for a long time, you're going to need 35K in the bank, and then we can definitely help you. Perfect.
And look, they're both great answers from both of you on that one. And I think that is what does separate a lot of companies out there of okay, I may not be able to do it this way, but we can definitely have a look at doing it this way as well. So I think that the key behind all of that is if you do have scenarios like that, that your best bet is to bounce them up to the Camerons, Joshes and the Danelles to say, okay, look, this is what I've got, this is where my headspace is at, but let them come back with what the options available might be as well, because it may be something that you haven't thought of yourselves. And I think that that's the critical takeaway from that side of it. So guys, Fred Flintstone, who's a great bloke, lives next door to Bunny Rubble. He's got needs to finance stock that he needs to have on hand next week, but some of his accounts are due to pay and some of them are running late. Would you still be able to finance him? And if so, on what terms? Cammy, I'll start with you.
Yeah, most definitely. And if I can just touch quickly on what you were just talking about there, about it being an offering to your client. A lot of people say, my clients won't pay 24% per annum. Like no one in the history of the world is going to pay 24% per annum. At the end of the day, it is only an offering to your client, and your client will determine whether the jam that it's getting them out of, or the opportunity that it's allowing them to take advantage of, is worth paying the 24% per annum, or if it's over 6 months, it's going to cost them 12%. And a guy like this that needs to put stock into his shop, if they're bottles of water, for instance, Nicolette, there you go, bottles of water, and they cost him $1 to purchase, and he's going to sell them for $2, he's going to make 100% profit on that transaction. Now, if he needs the money for 3 months to do that, and it's going to cost him 4% a month, it's going to cost him 12% to sell that bottle of water. Now, the bottle of water has cost him $1.12, and he sold it for $2. He's still making a tidy profit on what he's doing. So there's scenarios where clients will let you know whether it's viable financially for them or not. On this scenario itself, again, we can help depending on the client's security. Most people in these sorts of situations will use a director's principal place of residence as the security for us to be able to do the loan against. And as I say, it really is just an offering.
And good answer there, Cam. Just to give you your mathematics, mate, it's 88 cents less overheads. Thanks, mate.
Did you just get a calculator to do that?
No,
Yeah.
oh, mate. Some of us can add up without fingers and toes today. So, Johnny, down to you on that one. Are there any lenders on your panel that can have a look at potentially doing this transaction for our old mate Fred? And roughly, what would the terms be?
Sure, thanks, Leah. I've actually met Fred's wife, Wilma, and she's pretty cool. So, look, there is, in this alternate space, that sort of short-term funding is what our lending partners do every single day of the week. So if the customer's turnover supports the amount of money that they want to borrow, then it will be a simple cash flow loan. It can be funded in a couple of hours. And documentation will be as simple as, bank statements, ID, privacy form. Nice and easy, done and dusted. Again, if it's a B2B business, then there is obviously that opportunity to be able to use a debtor finance type product or a line of credit type product. And again, the difference between that is it'll be somewhere between a 30, 60, 90 or 120 day term as opposed to sort of 12 months plus. And obviously is then also a percentage of the total amount of invoices outstanding from, some of their debtors. So, it's that beautiful cash cycle that a lot of our clients struggle with. So, look, the key is if you find that you're, that the debtor listing is over 90 sort of days, then you are going to struggle to access debtor finance because no lender is going to take on someone else's bad debt necessarily. But look, if it's just normal standard supply terms and they need the money today, then honestly, mate, this is a deal every day of the week with a cash flow lender or one of the invoice guys every day.
Perfect. And Joshie, over to you at OnDeck side of things. How are you placed on this side of the world? So if somebody is needing this kind of finance, how are you placed with it?
Yeah, look, I think, Danella said it, it's our bread and butter. The kind of most common reasons why customers come to us are often stock or growth opportunities. So what we do is we basically look at the most recent 6 months of business bank statements. We fundamentally calculate servicing on the last 3 months. And normally in terms of monthly turnover, we can go between 1.5 to 3.5 times the monthly turnover in the business. Again, if it's a short-term opportunity, our terms start from 6 months. They do go up to 2 years, and we have a 3-year term coming shortly. So again, it's just kind of understanding what the opportunity is for the client. Is it something where they want to flip stock quickly and make a nice healthy margin on it, or is it kind of a longer-term growth strategy that they're trying to achieve, and do they need a longer term for that?
Perfect. I'm loving it, guys. We're cracking through the questions that we've got here this morning. So guys, trivial question. We've just come off the back of end of financial year. Will you guys lend for ATO debt, and is there a maximum amount that you can lend for it? Josh, I'll come to you first.
Yeah, easy. I think short answer is yes. I think there's probably one of the scenarios that you just need to understand a little bit more behind the background as to why they want to pay out the ATO debt. Is it something that has been aging for a long period of time and they haven't been making their payments? That's probably a very different scenario to one that I see quite common, which might be that they want to pay out their tax facility to make sure they can access an invoice financing. approval that they've had, and one of the conditions might have been that they needed to have a $0 balance on the tax portals. So they're two very different scenarios. One's kind of solving potentially a cash flow issue, and one's more of a character concern. But I think it's when you're kind of having those conversations with your clients, that's probably the best first step to start in terms of what's actually the motivator behind it. But yes, we will.
Perfect. Danelle, do you have anybody on the panel that can do ATO debt, and is there a maximum amount for some of these lenders?
Thanks, Leah. Look, most of the lenders on our panel will clear out ATO debt, and some of them will have different views on the amount versus the monthly revenue. So it can't be more than 1 time or 1.5 times. So that does vary between lender and lender, but most of them will take it out. And to sort of touch on Josh's point around character, if you're a business that hasn't had their taxes done for 3 years and then all of a sudden you've got a tax debt and you want to pay it out, good luck. Even in our alternate space, that you struggle with the normal type of lenders. And then to touch on Cam's chat before about solutions, we all want our customers to end up in mainstream banking with the best rates that they can possibly get. That's everyone's end goal. So a lot of the time, mainstream funding will be hamstrung by ATO debt. So again, is the cost of the solution to either deal with Josh or deal with Cam or any of the other lending partners, is the cost of that solution worth it to be able to refinance your property or buy a commercial property or buy another investment property? 100% it is. So it really does come down to the reason why they want to clear out that ATO debt, and 90% of our lenders will do it.
Perfect. And Cam, up to you from Strive's side of things. Can you lend for ATO debt, and is there a maximum cap amount as to how much Strive will do for ATO debt?
Yeah, listen, most definitely we can. We do it quite often because, touching on what Danelle just spoke about, people typically are getting knocked back for a refinance on their house because of a company tax debt or what have you. So we can bring any amount up. We've paid hundreds of thousands of dollars in tax debt to bring it up to date. And then we get washed out in the refinance. A lot of the mainstream banks won't give clients cash out to pay tax debts. So we can pay the tax debt, bring the tax portal up to date, take a second mortgage on the property. And on one of these last week, I was speaking with the Bluestone guys, and they are always more than happy to refinance a second mortgage to someone like us. So all of a sudden it can go back into more mainstream banking at obviously really low rates. We have no minimum term. So we can literally pay out the tax debt today. And if the refinance is done in 2 weeks' time, it'll cost them 2% to be back into mainstream banking. And I don't know many people that wouldn't pay 2% on their tax debt to be back into mainstream banking.
Sorry about that, guys.
Was that your COVID test?
Mate, that's the perils of working in a hotel and not putting do not disturb on your door.
Was that your cleaner,
that's housekeeping. No, that was housekeeping. Wanting to come into my room.
Your minibar will need to be refilled, I'd reckon. It'll be already drunk by now. You've been there for 12 hours.
The minibar is still standing, let me tell you that much now. But yeah, the perils of doing live webinars, guys, is you get to hear it all as it's happening. And poor housekeeping is kind of like, can you just come? She's like, yeah, sure, I'll come back in a minute. So we're all good with this. I can assure you that my room is going to be clean for me at some point of today. So guys, quick fire questions for you at the moment. And raise your hands if you can do these particular scenarios that we're going to ask you the why you can do them, or the reason the no you can't do them. Is there anybody on today's panel that can lend for the following? And if so, can you let us know the maximum LVR and loan amount? So a hobby farm.
Yeah, we can do a hobby farm.
Well, we've got Cameron Garnham first bite, because Cameron follows the rules where I said raise your hand first.
I used to muck that up in grade 3 as well. I haven't got any better at it.
That's okay, Cam. But I'll give the floor to you now, Cam, because you jumped straight in there, bud.
We can't. If it's a working farm, we can't do it. But if it's a hobby farm in a company or a trust, then yeah, we could definitely look at it. LVRs will be dependent on whereabouts it is, how big it is. It's not going to be 85%, but somewhere around 60% probably.
Perfect. And Danelle, there was a quick raise of hand for you down there because you can clearly follow the rule book. Have you got some lenders that will have a look at a hobby farm for me?
Those that know Cam that are on this call knows that he can't follow the rules, so really it's okay. Yeah, look, there are a couple. We always know that, you know, hobby farming is probably actually a little bit easier than straight out, you know, ag farming type deals where, you know, it's 6,000 kilometres from the nearest town. They're still pretty difficult, but we've seen a couple of hobby farms come through. And again, it typically will be funded in Cam's space. So again, it's all about equity and exit strategy, really.
Perfect. And Joshy, over to On Deck, yes or no?
Yeah, look, are our funds the best use to purchase a farm? Probably not. Are they a good use of funds to upgrade the premises, purchase equipment for it? Then yes, we can do it, and we certainly still lend to agricultural and farms.
Perfect. So that's going to lead me into my next one, being an income producing farm. Now, are we going to be, and Josh, I'll come to you first, are we specific on the income producing side? So are we talking dairy farms? Are we talking chicken farms? I'm just going to throw that out there, beef farming. Are we talking major agricultural that you'll look at, or are we looking at income producing being on those minor sides as well, where we might have a veggie farmer, rose farmer, that side of things?
Yeah, easy. Probably comes down to the nature of the cash flow. So if they're kind of selling cattle or stock, I'd probably expect that to be a longer cash flow cycle, and they probably won't have too much income coming in. If we look at, say, the last 3 or 6 months, it might be quite lumpy. What we're looking for a little bit more specifically is more kind of consistent cash flow in the business. So I know we've got an approval at the moment for 250,000 for a mushroom farmer. You know, we'll certainly look at those scenarios. It's just understanding their payment cycles.
Perfect. Danelle, over to you at Lend. How are we going over there for income producing farms?
I'm interested to know what sort of mushrooms they are, Josh, at 250k.
I wanted to go down that path, but keeping it totally professional for this call.
Well, you can rely on me, Leah. Yeah, look, we've just had one funded last week, actually with a lender who's also a sponsor of the FBAA, and they had sheep. So they had, you know, meat, wool and grain. So again, it's all about when you're talking about cash flow lending for farms, it is really about that cash flow cycle. And so a lot of lenders talk about concentration risk. So, you know, are you supplying to one company, or are you receiving 4 or 5 deposits per month? And obviously, again, shameless promotion, that's where the lend system will help, because it'll read the bank statements for you and determine the concentration risk and then present the right lender. If you're a farmer and you're selling to, you know, Woolworths, Coles, all of those sort of places, then again, you've got your debtor finance option as well, because that's all reliant on the actual quality of the debtor as opposed to you and your business. So definitely there's a couple of options out there for sure. Oh, Leah's stuck.
We'll take it from here. We don't need her anyway, really.
Yeah, over to you, Cam. Over to you, buddy.
Nah, thanks, mate. Well, I just keep looking at Nicolette in the top right-hand side of my screen, shaking her head at virtually everything that we say, thinking, how do I end up on this joint presenting after these clowns with her very serious stuff that she talks about? And she's always has to follow us bullfeds. Listen, we won't do income producing farms typically to answer Leah's question. Have you got another question that you want to fire with? I love being the boss. This is, see, when I can't raise my hand, I just get rid of the teacher and I get to take over. It's just how we work. Joshy, you got something to give us, some insightfulness to round out with?
Yeah, look, I think one of the common questions that I get is, you know, what's the most approved industries that you're looking at the moment, or what's the industries that work really well? I don't know, New South Wales in lockdowns and hospitality are impacted, you know, quite harshly, but hospitality and for some reason mechanics are actually one of our most approved industries. So if I look at, again, talking about kind of cash flow cycles, if I look at the cash flow that I'd expect from even a takeaway hospitality business, is you're expecting them to get daily POS payments, you're expecting them to probably get daily cash payments as well, maybe a little bit less at the moment. But again, as long as they're showing that they are operating and there's more consistent cash flow, which is you expect, then that's a scenario that we want to see. But again, on the flip side, being a farm, if they're only getting 1 deposit every 6 months, it's a little bit difficult to underwrite and understand the cash flow in the business and what it's going to look like moving forward.
Yeah, for sure. And listen, I guess that's where we're exact opposite, right? we're looking for, our typical guys are builders and what have you that are waiting for progress payments, and the progress payment might be 2 months away. So they don't have that weekly cash flow, which is why we charge interest only, and they can pay the lump sum when they get that money come through. So we're sort of at completely different opposite ends of the spectrum there. And I guess it's where we can also work together. I was saying earlier that you need a $35,000 deposit on the $100,000 purchase. Well, you might be able to do the $35,000 second mortgage, which gives them the deposit, and then blend that with guys like yourself that will then do the unsecured stuff for the other part.
Yeah, correct. And we'll certainly still look at deposit for equipment as well as another common example. We might not be the best use of funds for a brand new truck or what have you. We might not be able to get the loan amount high enough, but the benefit that we can do is we can step in and provide a deposit, and often that results in a lower interest cost on that primary facility as well.
Legend. And Donnie, talk to me about commissions to brokers. How much do Lend take?
Well, here's the big question. Geez, you're good to me, Cameron. Thanks very much. Lend takes zip. So the following question will be, how do you make your money? So we pass on 100% of the commission to the brokers, and you'll typically, across most products, receive that the same day your client receives funding. How we make our money is on volume. So our lender partners, such as yourself and the guys at On Deck and Finstro, all of those guys. So based on our volume is how we make our money. So, and back to you two very quickly, because I'm sure Leah will butt in if we need to stop talking. But Cam, just roughly, I know it can vary, but LVRs, commercial, residential, metro, what are you looking at?
Yeah, typically commercial and vacant land is going to be 60%. Residential property up to about 75%. And then we have our three different products. So we have a 9.99% first mortgage product with a registered valuation, which is going to get to 75%. Our second mortgage stuff, it's more determined around the exit strategy, which goes into the LVR. So if a client has got their property on the market and it's going to auction in a month's time, and they just need the money for 2 months while the auction happens and the property settles, then we're going to lend them a higher LVR against that property than we are somebody that says, I'll pay out using business cash flow in 6 months' time. So the exit strategy also comes into what LVR will actually lend to.
And that, look, I'm just going to jump in, Cam, guys, because it doesn't look like Leah's going to be able to join.
Can you guys not see me?
Oh,
now we
back.
Okay, fantastic.
No, I was just letting you guys go. Sitting in the background, guys, for the rest of the audience, I'd like to introduce you to the new East Coast State Manager, Cameron Garnham from Strive Financial.
Pleasure was all mine.
So, guys, great job going on there, and appreciate the support from the wonderful Tech Issues. As we said, when you go live, we need to be prepared for when things go wrong. But the FBAA is so prepared that our national sponsors know the script almost word for word. So well done there, kids. But the critical question I'm going to ask you all before I kick you off, Donnie, to get accredited with Lend, do I need to go through my aggregation panel?
Look, we really recommend that you reach out and check with your aggregator. Obviously, because we only transact commercial finance, it's in my nature, it's who I am, and it's very part of my personal values. I'm never going to turn away a broker who needs help with a scenario or who needs to ask me some questions. But as far as registering, we really do recommend that you just check in with your aggregator first. If you're not a member of an aggregator because you are a commercial only broker, then we are looking for industry association membership as part of the accreditation process.
Perfect. Cami, up at Strive, do I need to go through my aggregator to be able to write business with you?
Listen, identical to Donnie, again, we don't do any consumer lending. It's all outside the consumer credit code. So again, you should be checking with your aggregator. But yeah, exactly the same as Donnie.
Perfect. And Joshy, over to you at On Deck side of things. Do I need to go through my
look, always recommended, but at the same time, we do hold our accreditations directly with our brokers. So again, it's kind of up to you and your relationship with the aggregator.
Perfect. So guys, I do want to thank you for this morning session. We do need to wrap up to keep things moving along today, and hopefully technology won't let us down again. So I'd like to thank you all for your time this morning. And, you know, if, again, the audience has got any questions, by all means, drop them in the chat box. My 3 favourite people will be online with us for the remainder of today's session, which just commits them now to having to stay online with us. But they will be in the background if we have any questions for them. Alternatively, again, you can send them through to myself. Happy to forward them on your behalf. So, guys, thanking Cameron again from Strive Financial, Danelle from Lend, and Josh from On Deck this morning.
Thanks so much. Stay safe.
Thanks for having me back today, Cam. I really appreciate it.
The bill's in the mail.
Of course it is. Discounted sponsorship for you. So, guys, moving along this morning, I'd now like to welcome the wonderful, beautiful Nicolette Spicer from the Assured Counselling Group, who will be presenting on easy, healthy habits on behalf of the Suncorp. Now, before Nicolette starts this morning, guys, I just want to do a quick shout out to everyone around the grounds as well. But I've been watching drinking water, because it is one of those critical things that we all do forget about, and God only knows I forget about it as well. But I set you all the challenge while you are in lockdown for the webinars that you are doing. Before you log on to a webinar, try and grab a litre bottle of water and keep it on your desk with you. And before that webinar finishes, try and have your litre of water finished. It's something that I've made a conscious effort to do now as well, is to make sure that I have a bottle of water on my desk when I do these things. But if you can do it, even if you just start with a simple glass of water and making sure you drink it by the end of the webinar, it's a challenge and a shout out that I give to everybody on the call today. So, Nicolette, I'm going to hand over to you.
Leah, I professionally love you. Thank you. Thank you for the celebration of optimising hydration. It makes me so happy. And thanks everyone for the opportunity to talk to you today about your mental health and wellbeing. So I work for Assure programs and have done for the last 8 years. And my job is to talk to organisations about the importance of mental health and wellbeing. We've partnered with Suncorp for the last 12 plus years in looking after their mental health. Now, this is open to everybody on this call. All FBAA members have access to free confidential counselling. So if you're in lockdown and you're a little bit stressed, you're not sleeping, you're overwhelmed, you're drinking too much grog, you're not drinking water, you're not eating the right foods, and you're just feeling as though you've had enough, please call us. I want you to take down this number now. It's 1800 808 374. We provide 24/7 confidential counselling with awesome psychologists who are kind, caring, compassionate, non-judgy, who are there to help you. Maybe it's not you who's struggling. Maybe it's your partner. Maybe it's kids who are having a hard time. We hear lots of levels of anxiety that have risen. Lots of people are having suicidal ideations. So things are tough at the moment. The worst thing that you can do is keep your feelings inside and not let them out. You've got the opportunity to talk to professionals. So there is light at the end of the tunnel. And not necessarily for those of you who might be stressed out of your brains, but for those of you who might just be, not feeling hopeful towards the future, or just feel as though your resilience is low. I've got a few tips that I'll share with you at the end. But there is also the opportunity to start setting some goals and start getting back to looking forward to doing some exciting things when lockdown finishes, but also just to take stock of good things that are in your life as well, and hard to see when you are in lockdown. And I know it is really frustrating. You guys have access to this wonderful counselling program, 4 sessions of confidential counselling to talk about anything, workplace, professional, anything that is bothering you. Most people actually talk about couples counselling, have couples counselling, so relationship issues, whether it be your partner, regardless of their gender, who's annoying you in lockdown or having troubles, or maybe you're losing your temper, maybe you're losing that connection that you once had because you're living on top of each other, maybe you're homeschooling kids and they're driving you mad, whatever it is, you can talk to any of our psychologists. We also provide wellbeing coaching. So that is enabling people to go from coping okay to coping beautifully, setting goals, working out what signature strengths are, getting back to some healthy, authentic living. And we also provide legal advice too. So all included, all free, all fabulous with 1,200. We've got 1,200 psychologists. So there's definitely somebody for you. Now, the tips that I wanted to share, and I love the team how they always make jokes and reference into the consumption of water, but you know what? I actually watch them every single week when we do present this, and I know that they are drinking water, which is fantastic. Optimising hydration is key for improving your mental health and wellbeing. And when we talk about that, it's exactly what Leah said, making sure you've got water on your desk. And if you find water a little bit boring, like lots of us, get a bit of lime, don't squeeze it in your eye like I just did then. Make sure you squeeze it into your drink and try and steer away from energy drinks and soft drinks and copious amounts of tea and coffee. And of course, keep alcohol in moderation. And when we talk about moderation, that's actually the Heart Foundation recommends 2 standard drinks a day, making sure you also have a couple of alcohol-free days as well. Nutrition, that's key. A lot of anxiety and depression can be linked to poor nutritional choices. So every day you've got to have your 2 fruits. You know what? I've got a lemon, probably not going to eat that, but that's okay. I'm just using it to demonstrate. And a banana. You've got to have 2 bits of fruit every single day and 5 veggies. So something positive, a goal to set your sights on might be improving your nutrition. And instead of abstaining, saying, I'm not going to eat the Tim Tams or I'm not going to get into the visitor biscuits or whatever treats are in your cupboard, doing something positive, like I'm going to have 2 bits of fruit and 5 veggies. And when you do go to the supermarket, concentrate on shopping from the outskirts rather than all that delicious, sometimes packaged food that you'll find inside. Making strong nutritional choices will absolutely set you up for optimizing your health. Doing a little bit of exercise every day, so 20, 30 minutes. And I know it's hard when you're in lockdown, but you can absolutely, sitting at your chair, move your chair out, do a couple of squats. You know, if you did 20 of those and then you turned it on the side and did 20 lunges, making sure your knees are okay. Obviously, I don't have board shorts on, so I'm happy to represent here. Doing some stretches, doesn't always have to be weight training, could be some stretching, it could be some deep diaphragmatic breathing. We're finding that a lot of us shallow breathe, and especially when we are stressed, we find that the oxygen is not getting to our head, which makes the situation even worse. Just spending time doing deep diaphragmatic breathing, they call it square breathing, and basically it is just sitting up in your chair, inhaling for 4 seconds, holding for 4, and then exhaling for 4 seconds, and taking yourself through that 8 to 10 rounds, which is a beautiful way to calm down and to enhance being centered. We've talked about the hydration. Can't reiterate that enough. If there's one thing you're going to take away from today, like Leah suggested, getting that water on your desk, connecting with people who bring you up, try and hang out or converse with or do Zoom calls with or touch base with people who drag you up, who make you feel good about yourself. Really important to try and cut those toxic ties and friendships. And if you're struggling with that, come and talk to our clinicians because they can absolutely help you. Maybe you need to join a new club. Maybe you just need to reach out and call someone who just makes you laugh. I always love being on these calls on a Tuesday because I'm guaranteed to get a laugh from Leah, Cam and Danelle. Going device free 1 evening a week, put that phone away, get off your socials, enjoy a meal without, scrolling through and seeing what your mates did on the weekend, the highlights reel on their Instagram. Going device free is a really good way to reconnect back in with loved ones, or just spend some time reflecting, doing some deep breathing, smelling some delicious oils like, I don't know, lavender or rosemary or, whatever it is. Burn a candle, take time out, sit and reflect. So important that we take that time out from our busy, busy days. Being grateful for things. I think it's hard for us when we're in lockdown, especially for you guys currently, and my heart does go out to you. But taking maybe a couple of minutes each night before you hit the pillow, just to think of 3 things that you are grateful for. Maybe getting in touch with someone that you haven't spoken to for a little while and giving them some positive feedback, or just letting them know what a positive impact they made on your life without being weird. I think sometimes that gratitude also helps us. And if you're ever struggling with anything, we're here for you. We're 24/7. This is funded for you. It's all private and confidential. Nothing ever too weird. The psychs have heard it all before. Rather than holding things that are bothering you inside, please just let us know. Thanks so much for having me. I'll stop sharing my screen now. Happy to take a question if anyone's got any.
There is one, Nicolette. If you can just reiterate the number for me, the assured phone number.
Yep. Thanks, Leah. It's 1-800-808-374. Now, it's 24/7. If you call us in the middle of the night, you can either leave a voicemail message and we'll ring you back the next business day, or you can press number 2 and it'll go to one of our on-call psychologists, because we understand that stressful events don't just happen during business hours. So there's an on-call clinical team ready to have a chat to you.
Perfect. And I think that is so critical to take on board, is that these people are there to help. They are there to ensure that you have the best support services available to you when you need them. I know that, Nicolette, I've taken, and we have this conversation weekly, but I've taken so much away from your sessions. And we were saying the other week, I now push to have one vegetarian day a week. I'm a meat eater.
Awesome. Awesome.
So I do love my vegetarian. And it's been surprising because there's been vegetables out there in my short existence for 42 years that I have experimented with before. And it's been quite interesting of learning to cook with different vegetables and learning that my palate over the years has actually changed as well. So that's been exciting.
So right.
Veggies are exciting things.
Not necessarily aubergine. I mean, I'm not one to, I don't want to downplay aubergine, but I think, wouldn't it be amazing if you could work out an amazing dish with the eggplant? So if anyone's got any eggplant recipes, talk to me. What is it?
I will send you one. Stuffed eggplant is one of my absolute favourite things that you have, because you can put chorizo in it as well.
Oh, okay, cool. All right, we'll share that because it's one of the veggies.
I will send that to you. So guys, that's Nicolette. And look, during lockdown, I think the one thing that we've stressed on as well is mental health is so critical. So don't feel like you're alone. And even if you're just having, I was going to say a bad day, but we'll throw it out there and say, even if you're having a shit day, you can always speak to these guys. The FBAA, Nicolette was right. We don't see anything. So we don't know who's rung in. We don't know what names are involved. All we get is that somebody from the FBAA has gone through the system. It's also available for your family members and your staff. And that side of it's critical as well. So don't just think this is something we're only offering FBAA members. It is your staff and your family members that are also invited to use this system as well. And the FBAA is picking up for it. So that's, thanks to our friends at Suncorp. It sure have been fantastic for the time they've been on board. And we look forward to that relationship continuing far, far beyond today's date as well. So, Nicolette, thanks for joining us today.
Thank you, Leah. Thanks, everyone.
Hang out in the background with us for a bit. If there are any questions you do want to send through, you can, again, send them privately through to myself, or you can send them as they've done in the group chat. I've actually put up there a great exercise thing. And look, it is from Kmart. There's a cycle machine that you can get. It's a little floor one. You can put it under your desk and cycle. About, I think it's 30 or 35 bucks at Kmart. You do it through click and collect, so there's no browsing involved there in New South Wales. But you can do click and collect with Kmart for that one. Inexpensive way of getting some exercise while you're sitting at your home office desk, and you can even take it into your work offices. So that's available to you as well. But moving along this morning at a cracking pace, guys, I'm going to invite Nick Weld, who is our New South Wales president, to join me in the background. Hey, Nico. And guys, we're going to be doing a local market update with our New South Wales team, so they can let us know, other than being in lockdown and suffering from several cases of COVID down there, and none of my New South Wales Council has COVID, let's put it out there now, a local update from down there of what your team's seeing. So Nick, first and foremost, how are you going down there?
Very good. How are you, Leah? Thank you very much. Thanks to everyone, particularly Cam, Donnie and Josh for picking up the ball and running and keeping the game going when the ref disappeared into another dimension. I didn't even, I turned my mic on, didn't even get a chance to speak. So well done, Cam. Good work. Yeah, look, welcome everyone. Thanks to all the sponsors and all the presenters. Echoing Nicolette's discussion around health and wellness and water, absolutely critical. Always got a big leader of that in front of me. Look, what I wanted to do is just have a bit of a quick discussion around what's happening in New South Wales as I put my broker hat on as a business owner. Look, as you will all know, we're a CBD-based business, and the resi space is going very strong. So keep your head down, keep things moving. It is very important to make sure your health and wellness is kept front of mind, because it's quite a difficult time right now for most brokers out there. So keep it going. We're seeing a very, very strong drive in CBD lending, particularly in the business space. Lots of mergers and acquisitions, asset finance, cash flow, growth funding. Sectors include agri, fishing, mining, construction, renewables, manufacturing. business is still going strong, even though we're in a bit of a lockdown period, which is a positive sign. Hopefully we can get out quickly and all go back to business as normal. And I've got my counsellor down in the ACT, Freya, who is also a business owner and residential broker, and she's just going to give a bit of an update on what's happening down there in the capital, in the state's capital. Freya, are you there?
Yeah, I'm here. Thank you, Nick. Thanks for everyone. Capital is going really well. We don't have any COVID cases, no lockdowns, and as of midnight Friday last week, no longer have to wear masks. So things are going really well here in that regard. Thank you. Sorry for our neighbours in Sydney. So the property market in Canberra is still booming. We now have median prices at 927,000. We're approaching $1 million for a median price, which we hopefully will achieve in this next quarter. Buyers are still, the right activity is still there, so we are on track to see that increase. The quarterly increase in medians was up 9.7%. So that is the largest increase that we've had since Domain actually started recording the data in 1993. Annual growth also up 19.5%. So that is the steepest annual rise that we have seen in 17 years. Many of the properties are going to auction, but there's a lot of uncertainty from buyers as to what they will sell for. A lot of people are, even missing the mark by $200,000 or $300,000, which has been really hard, especially for our first home buyers. A lot of first home buyers are now leaning more towards off-plan purchases with developers where pricing is really clear and open and probably a little bit fairer and easier to get into. So that will be the big focus for first home buyers, where they can get into the townhouse market, but a lot are finding their budget is sticking them to units at the moment. A really, really great result in Throsby. Those that don't know Canberra, that is in Gungahlin, sort of the first suburb you hit off the federal highway. Throsby last month saw a record price for the suburb of $1.9 million. That is $500,000 more than the previous record. So really, really impressive result out there. We think that this boom will continue in the next quarter. Auction clearances are starting to reduce, but the buyer activity is still there. We think that the reductions are happening because people are so unsure what properties are going for. They're more reluctant to attend an auction. Those properties that aren't being sold at auction, we find the week afterwards, it's an auction behind closed doors, and they're still going. We expect it to keep going on, and then obviously when we hit the spring busy market, even better results. So even with all this in mind and the low interest rates we're seeing, Canberra still remains the most expensive city to rent a house in. Median house rent's at $630 per week, which is a 10.5% increase year on year. And that's the strongest growth since 2007. Unit median rent's also up to $500 per week, which is 6.4% increase year on year. And contributing to this, there's a lot of expats returning to Australia looking for rental accommodation. We're now becoming a really great state for interstate movers because of how we handled COVID and our lack of cases. There also appears to be a lot of cashed up sellers in the rental market at the moment, needing short-term accommodation while they purchase their next property or build. That's the property market under in a nutshell. We are looking at probably having a few more coffee meets, which I'll talk to Nick about in the next coming months, with some of our local BDMs that are still on the ground in Canberra and able to help out while we can and still have catch-ups. It's great to do them face-to-face. So that's it from me in Canberra. Thank you, Nick.
Right. Thanks, Freya. Let's see, really interesting. Actually, punching $1 million as the average price down there. It's crazy.
Yeah.
Unbelievable. And look, just on that, unfortunately there's not going to be any coffee meets or events here in Sydney right now, as we all know. and everything that is planned is likely going to go to digital in the very near future. So we'll just have to stay aware of what's going on with emails. Make sure that you subscribe to the FBAA's email distribution so you're aware of what's going on. If you've got any info, me and my other 9 counsellors are all here to talk. So if you need if you need to talk to someone, pick up the phone and give us a call. All the details are on the website. I think that's about it, Leah.
There you go. Thanks for that. And look, Freya, I'm going to be in the same boat as what Nick just said about the property prices in Canberra. Being an ex-Penrith girl myself, that's phenomenal stats coming from down at Canberra. I remember in my youth, property prices down there being at the $350,000 mark. So growth has definitely been a good thing for the Australian Capital Territory. And it's great to see all of the things down in New South Wales and the ACT growing at the rate that they are as well. I mean, Nick, for your side of things, the property market, especially around the Sydney regions, it's just, you know, it's obscene at the moment, the price that people can be paying even for, you know, your standard 1 and 2 bedroom units down there. So it's great growth, and especially during COVID, we haven't, from what we're seeing, we haven't seen a huge drop off in people purchasing. If anything, because they're not traveling, there seems to be more people coming into today's market. So I think that's a bonus for brokers as well. Are you seeing the same thing down there from your side of things?
Yeah, absolutely. Yeah, but bonus for brokers, because the loans are getting bigger, and it doesn't seem like there's any sort of shortage of buyers, as you mentioned. We're right now in winter, and it's still relentless with the purchasing. You know, you go down to the northern beaches, those sort of premium suburbs, and you know, 10 mil for a property. It's pretty crazy.
Definitely crazy times ahead of us. And guys, it does lead me back to saying as well, remember, you do have the marketing pack there, which has the campaign for Call Your Broker in it. Now is a great time to get that out on social media, to let people know to contact their broker, especially about the markets and what they're able to borrow. If you've got people that are going through hardship at the moment, they may have lost their job because of restrictions in COVID. These are the things we want you to talk to them about as well, is that we want them to call their brokers. We would rather you guys be ahead of situations that are going on than them going into some sort of financial hardship and wonder what way to turn. So, Nick, I do want to thank you and Freya for joining us this morning. It is appreciated, the time that you do give up to be a part of our New South Wales Council. It is a volunteer's position. This year we'll see us have the largest council in New South Wales to date. So congratulations, Nick, on building that world down there as well. And if anybody on this call is interested in ever joining our council down in New South Wales, please feel free to speak to myself or Nick about it. We're always happy for people to come on board with us and experience being a part of the council and a part of the collective for the FBAA and obviously the future of the association moving forward. So guys, thank you for your contribution to today's session.
Thanks, Leah.
No dramas. So guys, it's pretty much wrapping up the end of today's session for us. But before we do close it off, there's a few quick notes I just want to cover. We do want to acknowledge our national sponsors again for their time and support, and you will receive their contact details in the email that's going to follow today's session. You can see what our sponsors are like from the pickup of the internet meltdown here in Melbourne, and that's what our team is behind the scenes for us as well. So we do thank all of them. There's a couple of new guys that have now joined us on the national sponsors side of things as well, and we'll be introducing them to you over time as well. Secondly, you will be receiving the QR code. We'll try that again. Receiving the code for 1.5 CPD hours and a short survey that's going to follow it up. Can you please make sure that you do fill in that survey for us? The more feedback you give us and the more information you give us will help us structure these sessions going forward. Thirdly, there is session 2 happening on Friday. Please remember you do need to re-register for the second part of this series. It will be from 10 a.m. till 11:30 a.m. Eastern Standard Time. So if you haven't registered for it so far, please make sure you do so through the FBAA website. And our keynote speaker will be Beck Smith from Wellness and Smith, and she'll be talking to us about practical strategies for stress reduction. I think I'm going to need that one by Friday. So guys, this Thursday as well, we also have our next Q&A session with Whitey, and it will have Matt Rogers from RBG Lawyers joining us. So please make sure you do register online to attend that one. Now, the critical part, the one I did tell you about in New South Wales, the FBAA National Conference. You by now have all received an email. Unfortunately, due to COVID and everything that's happening, the conference has been moved. So it's no longer going to be on the 30th of July. We are heading that one up on the 5th of November on the Gold Coast. The rest of the details haven't changed. We really did hit the nail on the head for business in a new world, because that is exactly what we're heading into. The Awards of Supremacy and Gala Dinner have also moved now to the 5th of November. A bit of surprise news that you will see an EDM going out about it in New South Wales. You are the first to hear about it, because let's face it, while in lockdown you have time on your hands. The Awards of Supremacy has reopened. So what does that mean? We are reopening submissions. We are letting those that have submit either resubmit or update your submission. For those of you that haven't submitted yet that would like to, you have a 2-week window. Up until the 30th of July, you can apply online through the awards website to have your entry into the FBAA Awards of Supremacy. It's not a hard process, guys. It literally will take maybe an hour or so to get it done. And we do also ask that you commit to a 3-minute video as one of the answers in there as well. So if you can do it, jump online for me and fill them out. You never know. You've got to be in it to win it. And I'd love to see those submissions for New South Wales coming through. If you need a hand with anything, by all means, please shoot me an email and let me know. Or you can send it through to awards@fbaa.com.au. There is also other webinar recordings on the FBAA's YouTube channel that you can access by jumping on YouTube and typing in FBAA. You can also gain CPD hours for watching those videos. So for those of you that have got a renewal coming up that are a little bit shy on CPD, jump on there and have a look. That for me wraps up today's session, guys. I do hope you all stay safe down there in New South Wales. Keep continuing to isolate. Don't go out in public unless you need to. And guys, by all means, reach out, even if it's just a chat, friendly laugh. We're all here for you. So make sure you do it. Get those 2 pieces of fruit into you per day. Get that glass of water on your desks. And if you need anything, Nick is an email away. I'm an email away as well. Please reach out and let us know. Have a fantastic day, guys. Enjoy what you can while you can, and I will see you on Friday. Bye for now.
Bye for now.